All right, hey guys, let's go over some charts. So, first up here, we have the XLP to SPY ratio chart. Now, the orange line here is the 10-week moving average, and the black line is the 10-month moving average. And something really strange is currently happening, and I have a theory as to why, but we will go through the chart. So, normally, except for this time, this time it's different. Normally, anytime the market crosses the 10-week moving average, as indicated by the red line here, the market has a crash. So down the bottom here, these blue and black candles, this is the S&P 500. Up the top is the ratio between the XLP and SPY. So as you see here, back in the start of February, we crossed above the 10-week moving average, and then the market sold off. We crossed above the 10-month moving average. We entered the bear market signal, and obviously the market continued to sell off. Same with here in July 24, we crossed above the 10-week and market sold off. And importantly, to coincide with those signals, we want our MACD to be coming up from a low point, which you can see it is down there. Now, when we go to the next signal, December 21, we crossed above, and then we obviously sold off. Show you that there. And, went above. And then, same with February 2020, the COVID crash. We've had two false signals there that didn't completely fulfill, and then obviously went above and had the bear market. And then same again here, October 18. And as you can see, the MACD every time is also confirming. And this chart is extremely accurate and showing us every time. So December, this one was above. I just wanted to show you guys. The MACD was actually above at that point, but that was a significant rise. That's what I was showing you. If you come up here from the low, it's built up, and then that had that pullback there. So again, proving that it works. I'm going to go over this whole chart for you. So here, 2007, we went above. Market obviously crashed. We had breakout just here before, and the market crashed at that point too. Not crashed, corrected, and then the market built back up, and then the XLP outperformed again. Basically every single time. So money is turning defensive. That's why it's doing that. And then again in 2000, in the 2000.com bear market. So where we're at right now is we've had 4 weeks, and we're significantly above here right now. And the MACD is curling up. It's all indicating to go down. But for the last 4 weeks, the market has stayed up and sideways. The only thing that I can think of is that there's a lot of new money in the market this month. It's defensive play in XLP could actually be fueling the S&P to stay up. Also, other money, going in and thinking everything's all good. It's January. It's the start of the year. Let's all start taking up stock trading because it's a new year. And they're about to get trapped at some point. And what we do need to confirm, which hasn't confirmed yet, is the TLT to SPY. So exactly the same deal. When it crosses the 10-week, we enter that correction. So as you can see, here, that obviously confirmed. It tried to break above there, and then, market sold down, and then TLT went up. It still hasn't yet, and then the same here in February, and then all the other signals are basically the same. Now, it does lag a little bit, but it hasn't yet confirmed. So this isn't a crash yet, and this on the XLP is literally the first time I've gone over the whole chart since 1999. This is the first time it's gotten so significantly above the 10-week and really close to the 10-month moving average that the market has not corrected. Like if we have a look over here in February 25, when the market obviously pulled down, I worked this out earlier, when we're about here, same sort of level, the market was down 6.5% at that point from its peak. And we're obviously not down 6.5% yet. So a bit unusual there. Coming over to the S&P with the Fibonacci levels, or the SPY, I should say. I noticed, the 100% measured move area, I'll say that again, area, That was obviously achieved on October 27. We went slightly above it on October 29. Obviously, we've made some new highs since then, but the chop that we've had since achieving this 100% measured move, like these are pretty big, decent chops that we're having here, which is what sort of happens at a 100% measured move area. So we're getting close here to a major correction. Having a look over at the VIX, the red lines are sell signals and the green lines are buy signals. And you know, they're accurate. We're still currently on a sell signal. And you know, we could keep going down, but the market seems to keep holding up. So who knows what's going to happen there. In terms of VIX futures, we're okay for now, but we are just hanging on at this level of 3.845. So it's quite a lowish level now. And when we have a look at the chart, you know, 0 to 5%, so we're at 3.845. The environment's an uncertain mood. The market lacks a clear direction or conviction. So that's exactly what's happening. You know, pretty obvious that's what's happening. So it could go either way. It's tricky to say which way it's going to go. Obviously, there's a high probability of a downside from such a high level. And as we've covered previously, you know, trading within that, you know, that 5-year parallel channel that we've been trading within. So in short, play it safe and go from there. Let's keep an eye on the TLT to SPY and the XLP to SPY and wait and see what happens and go from there. All right. Thanks, guys. Bye.